Good afternoon. This is the Option Pit Trade Idea of the Week. I am founder Mark Sebastian. Reminder, this is for educational purposes only. None of this should be considered financial advice. Consult your financial professional before doing anything. Options have risk. All right, so with that, let's talk about the market. Well, this is the current formation of the VIX futures, and this is extremely negative for markets. D's trading above Jan above Feb above March, everything looking ugly. I think we line up for a potentially really ugly Monday. It could be bad, and we could see. I think SPOOs are going to weaken into the close. Maybe the vol squeezes a little bit over in VIX, but you can see, look at that curve. I mean, that is just incredible to see the curve moving like that. That is a bad sign. And so with this curve formation this way, there's a lot of people like to be short vol premium. They like to be long XIV or short VXX. Well, when this flips, VXX actually starts to work in the trade's favor. It actually rallies instead of falling. So when I see this formation, I like being long VXX and UVXY. And those trades can be extremely inexpensive. So in relative terms, UVXY, if you look, has gone, look at this move. All right, take a look at this. It's gone from 2380 to 38 in a couple of days. And it could keep going. And all I want to do is play in it next week. I want to play in it all this Federal Reserve fear. Look at that implied volatility, though. 260%. All right. UVXY might make a run of 50 here, folks. I mean, it has a real shot of just completely blowing up. So when I look, I can buy the 45 calls for $3.40. All right. I might consider doing, because that vol is so high, doing the 45, 50, 55 spread. So if you look, the 45 calls are 340. I can sell the 50 calls twice at 250. All right. So that's $5 versus 340. So that's $1. I've got $1.60. So it's only 30 cents for this butterfly. Now, I know this is a little more complex than I normally do here, but I really think that I don't want to own vol premium. All right. So I am going to trade this, and I'm going to try and own this for as inexpensive as I possibly can. All right, bought. All right, so I've got my 2. I'm going to drop this to 250. Sold one at 250. I'll sell one more at 252. 251. This might work in my favor. Now I'm not going to get greedy here because this is so crazy expensive. I'm expecting my 250 to get lifted. I may have to be patient, obviously. you know, as you can see, this thing moves around in 10-cent increments. So it will not take very long for this to fill itself. But that is going to be the trade I'm going to do. Now, you're saying, Mark, I want something simpler. Then I would look at, you know, my approach would probably be to trade the 45 calls. I think that's the correct way to do that. Yep, and there you go. See, patience, 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 patience. And now I'm filled in at relatively favorable prices. All right. All right, folks. You got questions, you can call me 888-TRADE-01, or you can email me, mark@optionpit.com. Reminder, this was for educational purposes only. My hope is to be out of this trade in the next couple of days. If you're wondering, hey, I don't understand VIX and VXX and all that stuff, go to our store. We have an introduction to VIX futures and options and the ETNs, and we also have our full-on VIX primer. The intro is 147, the primer is 247. So that's something you can do. All right, folks, have a great afternoon.